You're
Cool.
good
Can
to
everybody see
go.
my chart?
Yep.
Good to go? Okay. I go ahead and start it. We'll kick her off. So, yeah, a lot of times, just going into some of the indicator use and stuff, a lot of times people get kind of confused and get, caught up in a couple different things because there's a lot of times there's so much information even with the indicator stuff that it kind of messes people up. So we're going to kind of go through a couple different things that really work and then kind of setting up. I'll show you how I set mine up. And also don't worry about the funding right now. It's a bit broken. They did some kind of update with TradingView APIs, so we pulled data from the exchanges for that. So we've got we're working on the fix right now. Should be pretty quick. So in any case, I'll just go everything else, and we'll leave the funding rates for another day, probably Thursday. Also, really good news as well. The ecosystem ticker picker thing is actually live. We've got a functioning version of it. So we have basically built synthetic indexes of a bunch of different products like, shit coins, meme coins, privacy tokens, exchange tokens, and we've kind of bundled them together to pull data to show which ones are outperforming which. Think of it like a live dominance update of like which coins are leading in the current market and conditions and why, which is really cool. So I think Thursday we'll be able to push that. So just a little, I'll do an announcement later, probably later tonight, to just kind of go through that because I think it's pretty interesting. And then we'll have a session whenever Mr. Bing, I think I got Bing coming on either Thursday or Friday for a session to go through that and some botting stuff because I know it's been a while. He's been out traveling all over the world. So in any case, going into the indicator stuff and some of the functions. So the baseline that I always use specifically for auto charting, when we look at the swing specifically, whenever I use this, swing sensitivity it'll only show the most important ones the more you lower it. For me, I generally like it to be shown on the bodies because it's showing the high of the swings, not counting, the wicks to the upside, but where it really closes. And very oftentimes you'll see that these levels become major points of confluence for the rest of the structure. And I think it's just so important to see that because once you start seeing, noticing when and where these things do that, you can see a very local, nice test of level that really coincide with the price action overall. So, even this stuff here, we had like gain a structure. Like, what did this eventually become? It became the April Q2. So in a sense, this is now giving you kind of like your range for the local range, right? Really powerful, and I think that's just an important thing to kind of keep an eye on. Again, I don't use the wicks, I use the bodies. If you want more of these things to pop up, you can just add it to the upside. Which does give a lot of false data, a lot of stuff that's not relevant. Generally, lower is better. Less information or less things will show you, but it'll show you the most important ones, right? It'll show you the big deal ones that really matter in the overall price action. And then a little bit more on the actual order blocks and things of that nature. So what I generally like to do is when I use order blocks, I usually crank it down to 1, like very, very low. Mostly because order blocks are generated from like two things have to be true. It has to have a certain amount of volume and it has to have a certain amount of like candle structure. So think like bullish or bearish engulfing candles, but volume has to be a factor in it. And this is what creates the order blocks, or the volume block, excuse me. And it's powerful, and it really, again, doubles down on the major levels where you see significant structure. They do go to the wicks, and especially to the left when you have overlapping levels, higher time frame levels. It shows you, where you're getting into the major resistance, where there's still some bullish price action, and you're pretty much in the middle of this kind of range we've created because of it. I like it also on lower time frames as well, just because it'll kind of give me a general direction of where the blocks are, where there's quite a bit of support and resistance, and if we flipped levels. And one of the things I haven't really talked about much before was like the flipping of zones is actually very significant. And when you see these levels flipped, it actually tells you, it's like, okay, what's going on here to the upside? Why are we failing? Well, you're in a mostly resistance-only zone of volume blocks, right? How about the downside? Do we have anything? Yeah. What happens when we bullish to regain a block? Or if we're above it, we want to see bullish back test a level. If we gain one, bullish back test and continuation. A lot of times people get confused because they'll start using the volume blocks everywhere. I'd say that probably the sweet zone is around about the 1 hour or the 30-minute zone. Realistically, too low a time frame and you get too many blocks. Too high a time frame, you get too few. So you kind of look for that sweet spot. And even here on the 1 hour with the sensitivity all the way down, you're still getting massive volume on the 1 hour, which tells you realistically where the major blocks are. You've still got major levels that we failed at, major levels back down if we want to test, where do we want to see holds at. Basically these are your targets. You can kind of trade plan, and if there's overlap a level, right? We've done that. We want to see overlap a level here. And so it's a nice little tool. For me, it's mostly just a check to make sure I'm not missing anything. And then also with the SR, and this kind of goes into some more broad strategy stuff, is I'll use this, I turn them on like the normal streams to kind of tell me like what's the major levels above us and why. A lot of people get confused on the different time frames, and the best way to explain this is lower time frame price action movements are much more relatable to like daily and 3-day. Higher time frame, you're talking about weekly, 2 week, and then when you have like the local high, the main high, that's going to be, the high for the quarter, the high for the year, all of the levels overlapped into one. So the gain of that high created is a very significant price action move. So generally with this, what I simply do is if I'm looking at price action, whatever ticker, I can use the blocks even on the 1 hour because I think it's an interesting one, like the swings. Right, we see major swing structure. We're seeing failure at the swing here, right? Where do we want to see gains of? Well, we're at the high. We talked about on the stream, probably coming back down. You want to see a gain of that level to come up and test higher time frame structure. So all you really do is use this as kind of general direction. If you flip a level, that level now becomes like the level to gain back, right? If you create a new low and bearishly retest it, you want to test lower in the overall structure. Some of the things that help me, especially with things, using like core trend, with all of these things. So when I'm looking at, as an example, core trend with, let's put the S&R back on. What I've done the way I use core trend is I use it usually the same because it's very middle ground price action stuff, or, a lot of like, trending, mean reversion and whatnot. I'll usually put the ATR filter on at like a score of 5. Just because I want some type of range filtering, so it doesn't just immediately enter me into a trade once it breaks out of a position. So you will get some zones, especially on the 1 hour, things where you're really choppy. But the way I use this for the most part is if I see that we're running flat, there's no trend, there's no direction here. What I want to wait for is a gain of level. What happens is if we gain the April Q2, this should go green. It should give me an average true range gain of level, which is great. Conversely, if we lose the daily open, what we'll see? We'll see a red core trend open. And that's going to be the important thing in my head because, yeah, it's great until the trend is broken. And what you're looking for is that if it's still going up, you're still looking for re-entries into that upside position. That's generally the way I use it, and the way that most of us use it is if we're manually trading while on it, because it'll allow you to re-enter trades on retest of levels. So if it loses it and breaks it, it's a little less relevant. Again, it depends primarily on the time frame that you're using it on. So even on the 4 hour, you'll get parts that are wrong, but it's higher than 50%, and you're able to then judge it based off of, hey, we're still in a bullish situation. Oh, this candle took us completely out. We ran flat. I actually popped a little bit of a short as it was kind of breaking down and testing, and then that was wicked out. So what are we doing now? We're basically just running sideways and have been for, 2 weeks plus. So it's a little less nice on the higher when we're going into like a range and a flat, which gives us a lot of opportunity when we look at scalps. So one of the things I do like about it is that we can use this on the 15-minute and it'll switch me automatically. And this is something that I actually tie in quite a bit with like the oscillators. So let's see if I can get this sucker moving. There we go. So on the 15-minute, we have stuff like retest a level. We have trend break back to the upside, right? The little line is the strength line. The thicker line is the trend line. And when they start crossing, that's when you start seeing, what do you want to see? Extra confirmation level, bullish test, gain, higher low, continuation move. We're getting into some resistance now. Price is coming back down. We're getting some reds. popping very heavily on the actual, scalp, because it's trying to scalp you back down, right? It's generally running this kind of thing. If you look at it, it's kind of running like a mean reversion type thing where it's, going in and around these zones. And now that we're back to the upside, it's starting to get to that point where it's just, trying to scalp you back to the center line of it in a sense. Now, this can be useful in a higher time frame as well if you put it on scalp mode to see the major resistance, major structure failures. But overall, one of the best things that we have with this is combining it with a couple tools. So we have that, and then we have, let's see if I have it. As an example, the liquidity grabs are a really nice one. This is something that I use even with the main thing turned off. Because even on the 15-minute, it'll show me spots where we took out some liquidity and then closed back bullishly in the trend. And it might start getting a little, choppy and a lot of information coming on the screen. But where is it? Bands types. So the bands types is, again, very much a scalping tool. I'll just let it load up real quick. But we can use these things together very, very heavily. Because the bands tools, especially on like stuff like the 15-minute, the bands tools with the harmony oscillator, like you have we're failing at a major level. We've got turn of level there. We're at the high of the band, and then we're starting to fail back down. Like a lot of these times, you'll have 1, 2, 3, the red zone, like 3, 4 confirmations that hey, this is a point of failure that we're trying to isolate. So that's a point of failure that's really important in the overall structure. And even here, what do we have? We have a test of a level, we have hold, regain, and then we have a trend change back to the upside. So you got 3 confirmations that we're moving back up. So there will be times where it's like, hey, we got the blue trend, it might be changing, but I really look for the oscillator on lower time frames, because this helps me say, well, with pretty high confidence, we're completely bottomed locally on the lower time frames of price action, right? Even if you're bullishly diverging, what's the problem with bullishly diverging? Well, it needs to actually gain something back. And the moment we created the new weekly open and then fell back down, there was nothing that says just because we get that lower time frame, it's not as relevant. High time frame divergences, extremely relevant. Lower time frame, less so. So if you're using the divergences on the oscillator, just take it with a grain of salt. But generally, that's how I'm using my stuff. Especially, we start breaking back to the downside here. What do you want to see? You want to see some bottoming structure going on with the oscillator, some hold of level if we come back to the upside. So that's the best way to use it. And the hardest thing is really, you have to be able to flip through tickers pretty quickly to kind of identify stuff. And that's the hardest thing for most people, just because you've got all of this data, all this information, like even here, like AVAX, right? We're kind of up here at a structure to fail. Let me turn this off. Getting some yellow dots, kind of failing the level, starting to break back down. Trend's not really breaking down, it's just kind of moving down without popping an alert. So looking toppy locally, but hasn't broken back to the downside yet. And that's generally how I'm using my stuff, which is, I want several confirmations of failure. We're above this level, this zone, right? We're hitting them even on the, one sec, let me go back. We're testing, the band resistance, the major stuff. We had the 3 yellow dots. Whenever you see the 3 yellow dots, what that means is you've had a liquidity grab. So if you have it to the upside, that means liquidity was just taken locally to the upside, so priority is down. If you have it to the downside, those 3 little yellow dots, that means liquidity grab to the downside, high priority for upside. It won't always play out, but they help with identifying structure. Very overbought conditions, top of the band, liquidity grab, failure, lower time frame, secondary failure that takes us down and breaks levels. So there's a lot of opportunities to use the combination of these things, even lower time frames. So when these sideways structures get nasty like this, and that's just the reality they do, you really need to look for something that helps you scalp lower and try to scalp the range. And that's all you're trying to do, is say, hey, this is a major resistance point where we're at now. What invalidates that? You have to gain the major level. The major level gain takes you back to April Q2, and that's how you play it. So short until proven otherwise. If it's proven otherwise, look for the bullish back test, and then you go to the next level up to test, if that makes sense. So any questions on that stuff? This is just a nice little combination of tools that I use quite a bit. One of the things that helps me a lot, specifically with stuff like core trend, is or with the oscillator too, is double checking my bias using stuff like the harmony oscillator or the on-chain metric bundle. One of the best ways to use it, and I'll go back to Bitcoin for this, is there's a combination of tools that are really successful and really work. Long-short ratio crossover, it's good for higher time frame. My favorite by far is the retail stablecoin demand. What I do with this is I want it to look the same as my oscillator because it's showing me demand from a retail perspective. So to do that, I have to check invert chart and regular divergences. So what this actually does is it says, okay, you've inverted the chart. That means when it goes up like this, you're seeing very, very, very low retail stablecoin demand. What does that mean, right? When it's in the red, that means that when the retail stablecoin demand's in the red, that most of retail is heavily allocated into higher risk cryptocurrencies. And that's a great sign that you're reaching a top, because what do we know about the market to be true? The majority of people are wrong. So when the majority of people are highly allocated in crypto, what does that tell you? That tells you that we are now we are at full allocation. You look for the swing fail. You have all these things of confirmation with you. On top of that, on top of the oscillator giving you these things, because I just combined them on the same chart. So now you literally have a blueprint of saying, failure, we're over allocated, we're breaking strength, we've broken trend, we're failing levels, we're bearishly backtesting zones. I mean, there's your sign, right? So there's a couple ways to use this, but the more levels of confirmation you have, the better. And I really think that that's like one of the strongest ones is the on-chain metric bundle. And anytime we get into those zones of, how do we get people less allocated? Well, you dump it out, you flush it out. And what do you want to see? You want to see very low values on, which means there's high demand for stable coins, which means people are exiting to liquidity. And then those movements combined with the oscillator, right? Then we start saying, okay, we want to go higher now. So you got three bands essentially by including retail stablecoin demand as a tertiary, and that's a big one because it's very powerful, especially the upside. So again, all I'm using on-chain demand, I'm using retail stablecoin demand, invert chart, and then regular divergences. It's going to be the most effective for Bitcoin because it shows the general market and the general market perspective. So as we kind of looks like it wants to flush back down, that's fine. We're only on the 15-minute, and it does change based off the time frame. So even here, we're relatively flat and neutral. So you can definitely use low time frame levels to give you a better perspective. And even with all the other stuff, like the bands and stuff, again, the band's much less effective on the higher time frames, much more a scalping tool. But I think those kind of three or four things combined on low time frames, I mean, you can almost scalp this indefinitely, just shorting levels until proven otherwise. Okay, quite high retail stablecoin demand, bullish back test, all these things. There we go. So, oh, Maria, your mic's on, by the way. I can hear myself on your speaker. Just a heads up. That's okay. No worries. Not a problem. I was just hearing my own echo. So yeah, that's where we're at now. Any questions on this stuff? Any other ideas that we want to use with kind of scalping stuff before we go into a bit more like swings in a higher time frame? Open floor. Just if you want to say something, say it. What's up, Alex? Just reading the messages in the fireside here. No, makes sense. So again, like I said, check your settings on it. If you're like me, like I don't like the labels on the harmony oscillator. You can turn those off if you just want to go to the oscillator style. Turn labels off. It just makes it a little bit nicer in my head, right? But that's the gist of it. What we're trying to do: lower time frame scalping structure. I have seen some stuff at like the 3-minute. I'm not super keen on it just because it's really quick and there's a lot of jankiness you know, especially if you have divergences turned on, starts getting really, really, you know, almost too much information, right? But low time frame, like 3 minute scalping, when you get stuff like, you know, yellow dot, blue dot, same level, top of the little bands, you know, and red zones for reversion, like that's your sign, right? You want multiple confirmations, and I usually wait for 4 or 5 if you're trying to use all 3 together. So even here, what are you seeing? You know, low, the low popped a liquidity grab. The next low was a higher low than the previous one. Bullish change in the direction because we had a high retail stablecoin demand and starting to reverse. So you can play these low time frame. Just understand if you're playing this low time frame, you have to be really, you know, pretty much religious with the way you look at the different prices and the different levels. Leverage is a big thing. Doing the checks from the lows, right? What do we have from the low? 0.47. Where's 0.7? Where's the liquidation levels? Pretty much the high of the bands. Previous high. So keep that in mind. It's a couple of cool little tools you can use with all that, which is fun. So cool. We've covered that. I'm going to do a little bit higher time frame now and just look at some bigger levels that are kind of important. And yeah, I'll put that away, and then I'll put this back onto. Yep. And turn the bands off. Keep liquidity grabs on because they're nice. So higher time frame structure with the general switch a level. Generally, one of the big things we have to really start helping us is that, hey, we're you know, looking at oscillator, looking at the retail stablecoin demand. With the higher time frames, it'll start breaking down and diverging on the first major pushes up. So when that happens, you have to really defer to the higher stuff. If you want to see major turnarounds of levels, you look for lows that are in the downtrend already, right? So a perfect example is, hey, we're coming back down to the downside quite heavily. It was short from the 22nd of Feb and got out of it back in, you know, March, almost, you know, like 3 weeks, 3.5 weeks. And what we did, we finally made a massive low. Then we did the higher low, regain a level. That's some of the textbook, you know, swing fail to the upside stuff that we look for. So the major levels with this and the big things to really keep an eye on are when you have situations where you're major overbought, oversold. When you're looking at alts, and this is kind of a big one. A lot of times the alts won't coincide very heavily with the retail stablecoin demand. So if I look at stuff like Litecoin, you'll see that the retail stablecoin demand, well, it looks pretty decent, but it doesn't really flow with the general movement of it. So I usually turn off the retail stablecoin demand unless there's a major, you know, level that we want to keep an eye on. What I look for as far as breaks and changes in overall higher time frame direction, when we have breaks to the downside, actually, let me just turn these off before we all go crazy because of my unwieldy charting. What I really look for, 4-hour changes on the core trend that also coincide with, hey, we're breaking to the downside, we're massively oversold, and now we're doing a higher low. These things are kind of like, it's a harder, more patient way to look at the market, but that lets you know that, hey, you know, one of the easiest things to do with the Harmony Oscillator, go on the 4-hour, and then when you set alerts to it, it's like if you add an alert to the actual bar, you look for Harmony Strength Extreme Overbought, Harmony Strength Extreme Oversold, and set those on the things you're looking at on things like the 4-hour. Because what they'll start showing you is that major downtrends and major uptrends will change quite heavily on the 4-hour. So when you are in these extreme lows, extreme oversold conditions, even extreme overbought conditions, right? Anything that gets over the 75 zone or below the 25, you need to start taking that with a, you know, perspective of, okay, we're getting into a chance of a potential reversal. Here we're running entirely flat, so it's less effective. But as you flip through the different tickers, the different charts, it allows you to then start picking the ones that look good and setting alerts for them. I've also put quite a few of these, if you go into the Discord, down to like 15-minute crypto alerts, 4-hour crypto alerts for Bitcoin and ETH. So what I've done is I put trend changes on those time frames, and then also stablecoin demand. So if we have stablecoin demand going very, very low, or very very high retail stablecoin demand on the low time frames, on like in the premium alert section, you can start to kind of look at like, hey, we're getting close to a potential bottom because there's so much retail stablecoin demand. And again, it's less relevant on the higher time frames because you really have to wait a long time. But being able to like flip through a couple different tickers, it'll show you the ones that are underperforming compared to other things, or doing better, right? Like sand, right? Bottom, every time it gets into a bottom zone, you look for longs on a regain of level, right? This would have been a nasty one because what do? We're holding structure, but we're still failing levels. We swing back to the upside, but we still fail levels. So what you really want to look for, have the patience to say, okay, from the low, we want to gain levels back. And a good way to see a change is like, what's a good change in trend? Well, we're consistently bottoming, right? We're consistently bottoming, making very, lows, new lows, every swing to the upside is sold into. And then you see a change where we actually have a bigger run up, making new highs on the oscillator, and then gaining levels and structure back. And that's always a good sign that, hey, we're seeing some potential reversal. And even a higher time frame. Right, and this is where it starts getting really interesting, is that once you see it on the higher time frame, you're thinking to yourself, well, if I would have bought that low, I would have known it, right? Well, that made sense to see that that's a liquidity grab. It's all these things on like a daily time frame. We're seeing failure here. You could have still shorted; it would have taken you out, but you would have gotten a good chunk of it. Generally, showing you the higher time frame changes, and when you see those with the blue dots, it shows quite high hit rate that it is changing the direction of the trend pretty heavily. So there's a lot of things you can use it for. For me, most of the time, I use it as such. I don't use, retail stablecoin demand is only super important to me on like the 4 hour and like the 1 hour. On the high time frames, it just means that, well, we're probably going to see some divergence, which is what we usually see, right? We see some bearish divergence. Price making new highs, oscillator making new lows, bearish divergence. So there's a couple things in there. I hope it helps. And I guess the big one also I didn't touch for liquidity and liquidations. I'll just swing back, just do a little double tap on that. Is the no, not the daily, maybe the 4 hour. Give it a second to load. It's mostly, I use the liquidations to identify the major levels and where they have overlap, right? What do we have to the downside if we start flushing and losing the 20? If you guys remember, why have I said 25K? This is one of the reasons why I've said 25K as far as losing levels, right? What do we have below us? We have quite a bit of long liquidity built up. All of the 10Xs down to the 20Xs and 10Xs that were long in this zone, they would be completely taken out with a retest of this structure here. Completely. Then what happens? Where's the local liquidity? Is the local liquidity above us or below us? It's above us. To gain more heavy local liquidity, you'd have to dump us into much lower time frame liquidity, which realistically, it's just not there. The local stuff, when we farmed out a structure sideways like this, a lot of times, and unfortunately, it kind of becomes anyone's game, where, as we say, we're in the range. You look to long the lows and short the highs, because eventually it's going to take out the structures. So what's an interesting play in my head? Well, the same thing as it always is. If we break to the upside, grab some liquidity, and then swing fail back in, where's the more local liquidity? Where's the bigger block now if we go back to the downside? And a lot of times you'll see that. And that's why I've said if we lose the lows here, we have to fill this gap and we will go to 25K. There's nothing left to do in the structure. So if we go to the upside, where can we expect to go? Probably 30.5, right? 30.5, and then we look for a potential failure. Then we look at some sideways. If we do this move and then go sideways and run flat for a couple of days, that's the expectation that alts will absolutely moon and fly. But, I look at this in the same way as I look at the rest of the, the movements in the market at. We want to see the liquidity that's been sitting there for a while, that hasn't been taken out, that's been allowed to breathe. And usually what we'll see is the lower time frame stuff, it's intraday. So for the lower time frames, you're looking for those, hey, we took the 100X and the 50X, and then we reversed, on the 4 hour, something like that. We took the 100X, the 50X, reversed, we went back to the downside. And this is why I will never trade 100x or 50x again on any type of system, because it liquidates it at least several times a day. Not just the daily liquidations, which is what we show, but intraday it'll liquidate 100x's dozens of times potentially, depending on what you're trading. So there's a couple things in there that I hope you got some use out of. Overall, again, we're in this kind of like crabby, nasty range that people really don't like, which I totally understand. It's not pleasant. It's not pretty. The higher time frame stuff just tells us like, hey, we've done this major move to the upside, and as we're running flat and sideways, we're starting to diverge a bit, right? We made new highs, not breaking down structure. If we turn back on the divergences, what does this mean? Well, technically, I think we haven't quite made... If we would have closed yesterday a little bit better or a little bit worse, it wouldn't have been as bad. But we're starting to diverge a little bit on some different metrics, especially on things like the 3-day. If I look at, say, the normal chart, the 3-day, this is an interesting one. We actually popped a bearish divergence on the 3-day. Now, I don't usually put a lot of weight on it, except, of course, when the 3-day price action is literally the cleanest of all of the time frames right now. You see that? So keep that in mind. We don't want to see, again, closes under these major levels. We are seeing some bearish divergence, which is pretty reasonable given the upside move and trend we've had. Slight, but what do we need the confirmation of? Loss of level. So you get the loss of level, you're looking for the continuation short and the break of the upside move to take you lower to 25.1. All right, 25K. Any questions on that? Let me just read the chat if anyone popped anything in. Yes, no, maybe so. So yeah, that's pretty much all I had, was just a kind of an overview of some of the strategies that I use, specifically trading things for the crypto space and Bitcoin, ETH. Those are always my primaries that I always go to and always look for positions, just because I know them and then it's like the back of my hand. I think, let me just see. Yeah. The 15-minute, it's like, it's a weird one in my heart, because the 15 minutes generally not really a great time frame to trade on for the most part. I like it, especially when you're using, or it's not really accepted as a really nice one. I kind of like it myself, just because it gives quite a lot of good information. And then coupling this, like I said, with the bands, because all the bands do is that we basically arithmetically harmonize a couple of different existing bands types and make sure it runs off of gain loss a level. So it's way too much. That was a way too much information, but that's the general gist of it. So very, very powerful, and like the 15 for scalping, along with all the other tools we have at our disposal. See if it actually fires up that. So, confirmation, 1, 2, 3, 4, high retail stablecoin demand, green. And the more you get comfortable with it, the more you can scalp it. And scalping for a lot of people is probably the next step. A lot of people have gotten used to the 4-hour and trading very well, and getting patient with it. Now they want to look at the expansion. And again, the easiest way to chip away at the scalping stuff is, 0.1%, 0.1% of your, or not 0.1, excuse me, 1% of your account in these positions, in these low leverage scalp trades, just shorting it, profit target, exit. Okay, look for the next trade. We hit a low, profit target, out, that type of stuff. But there's a couple really good, I think there's a lot of really good ways to do it. I know we do a lot of manual, I do a lot of manual TA on the streams and stuff for TradingView, but generally speaking, I mostly just use our own stuff internally just because it's cleaner. And I look for those failures. And I'm probably going to be saving this as a profile just because, this is like the scalp kind of master key I've found that really works for a lot of things. Failure, back down. Just look for confirmation. That's the biggest thing. And I think eventually we're going to be able to do that where we have multiple things where it says, you know, oversold over this, and you'll have like a little dashboard to be able to pull in stuff, because apparently we can build libraries in PineScript now. So there's a lot of things that we can do to improve it, which we're working on. Let me just see what else was there. If I load, is it the ticker picker? Yeah. So this is the one that's coming out. I'll give you guys a little preview that we're going to be releasing on Thursday. It's a bit of a big one, so. So just a taste so we can all take a look at it, because it is a lot of fun. Hopefully it doesn't break right away. Okay. Also, I'll push the hotfix. We identified it. I'll push the hotfix for the funding rates, so that'll work with us as well. So this is an interesting one. If I'm going to use this myself, one of the best ways to use it is in a split screen. So something like this, and then I'll just remove it from the one that I'm looking at it and make it the full screen on the other side. And the reason for it, what you're actually seeing, is which one, based off of flow score, is actually performing the best, and then the correlation to the rest of the market, which ones are most correlated. So with this, we can actually see, hey, look at that, metaverse tokens are actually outperforming everything else. Large caps are again outperforming everything. You know, the Bitcoin, the ETH, the correlation is the highest. Altcoins, not so much. Altcoins, it hasn't quite broken that way. Stable coins, yeah, not really important. DeFi and DEX starting to improve significantly. Metaverse doing well. NFT garbage. Privacy pretty garbage. Smart contract not really there yet. So we have this whole list of stuff. We'll kind of pop it out for you to be able to see everything that's going on with it. Let me just check. So yeah, stuff like the meme coins, stuff like Doge, SHIB, that's going to be on there. And we'll have a list of things. You'll be able to see what's moving and what's not. DEXs, right? Stuff like Uni and Sushi. AI projects, stuff like FAT and AGIX. That's going to be a big one because that's very powerful. You know, smaller cap shitty projects that pump a lot and dump a lot, stuff like BAT and HOT. Those are going to be on like the shitcoin index. Alts, also high, you know, that's high volume but not massive. Like LTC, XRP, large caps is Bitcoin, ETH. So there's a lot of stuff that we're going to be able to pull from this and kind of give us data about how the markets are moving and where structure and stuff is. So you're seeing stuff like this, like sports coins, right? These are like the ones like CHZ and Flow and some of the in real life sports teams tokens performing horribly comparatively to everything else, right? Very bad. But what happens if we start moving up? Well, then you can start having a different take and perspective of it. So, you know, especially on a higher time frame, when you have this stuff set on like the daily, right? You see which ones are doing really well. Well, meme tokens have been outperforming the last couple of weeks, and AI tokens were very high. So I can actually isolate, say, AI tokens and say, you know, if I want to look at AI tokens specifically, I can just turn those very, you know, thick lines, and I can see, well, looking back, how did it perform to everything else? Well, it was performing very well back in January compared to everything else, and again had a big spike back in February, but now it's pretty much died down and it's done very poorly as a correlation. What does that tell me? It's like, well, two things. Meme tokens are probably getting close to like the end of their little run. AI tokens and stuff that's lagging, we look for those to continue. Things that are moving up, right? These are the things that kind of tell us, well, we want to keep an eye on it. And so we've got a couple strategy things going on with it. I think it's a pretty interesting thing overall, but it generally will show you what's moving and what's not, based off of the type of coin they are, and they all kind of move together. So the more we start seeing that stuff, the more we'll start being able to correlate and move in and say, hey, well, look at that. The meme tokens are doing very, very well. Let's look at meme tokens, that type of stuff. Or, smart contract tokens, stuff like Link, and, that type of thing. So we'll have that whole list. Should have it ready to go on Thursday, which is cool. And I will push the updates for the funding rates here as soon as I get off of here. So that's all fixed. Any other questions or any comments, any strategies that you guys might be willing to share or want to talk about or think of? Or please, it's open floor. Going once, twice. Everyone's happy. Well, cool. That's all I had for today. Keep an eye on it. I don't know if it'll be Thursday or Friday, but we'll have a session when we release the new indicators, or the new indicator. I think it'll be either Thursday or Friday. I'm not sure yet. We got a couple small things we want to kind of fix, but yeah, keep an eye out for that, and then we'll have a session with Mr. Bing where he'll go a little bit more in depth on that indicator, and then go through also with the automation, like some botting stuff, and those are always good sessions because he's always got some great ideas with how to improve things. So, well, thanks everybody. Hope you got something out of it.